Eddie, I think a lot of people do obsess over interest rates a lot. We understand that does play a big factor, but structure is also very important as well. So maybe just talk through, why structure can sometimes be more important than interest rates, and maybe vice versa as well in some circumstances.
Absolutely. It comes down to what you're trying to achieve, right? Like I've seen people who have taken just the best offer they can get to get them into the market, right? Rather than just waiting for the cheapest rate and the best offer out there. They went with second or third tier lenders just to get themselves into the property market. They paid higher interest rates, higher fees, but welcome to another episode of the Brokers Lounge, and as usual, Eddie and Carlo with you today. And today we're going to be discussing first-time buyers and a few things that they need to understand or mistakes they do. But always, before we start, Carlo, how you doing, mate? How's things?
I'm doing very well, thank you. Yes,
Things well?
doing very well. Yes. It's the year start off very quickly. We're already in, what are we now? In February already. So
You've got a few big milestones to do in your personal life.
Yeah, so over the weekend I had my daughter's bridal shower. So that was a big affair for us because it was at our house, excuse me, and 45 women all in the backyard. So yeah, but it was a good day. And that was the most important thing, that my daughter had a very good day and she was very happy.
Congratulations, well done.
Thank you. So for not, the wedding will be here. So next month, end of next month. So, and then I'll have nothing else to talk about really after that. So, but I'm looking forward to
Just do some work then.
I can get back to work then. Yeah.
If anyone needs any help with the bridal shower, or
I'm not available.
Carlo's available. All right, let's jump to it.
Sure.
So basically, first-time buyers, right? Like a lot of information out there, a lot of what do I do, where do I start from? There's a lot of misconceptions as well, and we're just going to try and simplify it as much as possible and just make you, if you're a first-time buyer, or even if your kids are looking to buy their first property, so they understand what not to do, what to do and what not to do.
Yeah, because I think there can be a lot of information overload for the younger buyers out there.
Yeah.
And on the flip side, even if there's parents out there trying to help their kids out, what I went through when I bought my first home compared to what my daughter went through when she bought her first, it's chalk and cheese. It's so vastly different. So you think you might be imparting the best knowledge to them, but you might actually be steering them in the wrong direction. So
yeah, when you purchase your first home, all you need
here we go.
license. Just need a driver's license.
And we just need $100 check and we'll secure that deposit.
Very done.
Close.
Right. So a few things to be mindful about getting into the market, I guess, is probably the most important thing. Like, just get your foot in. Don't focus too much on how it's going to be in 5 or 10 years time, because your circumstances are going to change. And obviously, if you're in your 20s or early 30s and just getting into the market, I guess being in the market beats, rather than just planning and over planning sometimes and overthinking how to do it and trying and save and all that sort of stuff, because the market will always be you. I remember when I was buying my first house, from week to week, the prices would change. So it wasn't up market and prices were changing. And by the time you plan, you're already missing out. So sometimes, depending on the market, how it's going, it's really important to just jump into it and figure it out later.
Yeah, and like you said, life changes so all the time. So you got to have the mindset that yes, getting in the property market, it's a great thing, and it's not going to be typically your forever home when it's your first home. So it doesn't have to be absolutely perfect and where you can sit there and go, I'm going to be in the house the next 40 years.
Yeah,
people were typically turning over houses. Well, I don't know what the Australian average is. It's probably every 7 years. I don't know. People turning over houses. I don't know. Was it a bit more than that?
I know.
Usually the stats on that.
3 to 4 years, people look at refinancing or restructuring, but moving, I'm not sure.
I'm running a bit behind. I'm at about 23, somewhere 24.
There you go.
It's time to move.
You bring up the average. Carlo, what's some costs that first-time buyers need to be aware about?
Yeah, and I think this is a big one because a lot of them do underestimate what what costs they need to be mindful of. I think the biggest one is obviously the stamp duty costs, but there's lots of things to take into consideration with that as well, because there are concessions available to first home buyers. So it's important to look at your various states and understand what concessions are available. For Victoria, for argument's sake, anything up to $600,000, there is no stamp duty, which is good. Unfortunately, it's pretty hard to find a property up to under $600,000, but then there's still a bit of a discount right up to about $750,000. So, but it's important to understand what that cost actually looks like. If you don't have a 20% deposit available, lender's mortgage insurance may come into play. So you've got to understand what those costs look like, and that will vary depending on the loan size to the final loan to value ratio, what state you're in. So and also what lender you're going to be going with as well. So it's important to keep those numbers in mind. Good thing about lender's mortgage insurance, typically lenders will allow you to add that onto the loan balance as well, so you can pay that off over time. Obviously not ideal, but if it helps you get into the first home, the cost will
If you don't qualify for any of the grants by the government for the LMI waiver, but yeah.
There's also other professions as well, which I know we've spoken about in past podcasts, where accountants and solicitors or whatnot in the medical staff, get access to LMI waivers. So conveyancing legal fees, I think most people got that under control because it's not a massive cost. I think
$1,000 probably.
Yeah, I think if you lay sort of $2,000, around the $2,000 mark is probably good. We've seen people get it for anywhere between $1,200-$1,500, which I think is probably a good ballpark figure to work on, but always important to keep those in mind. Other little costs, which are minor but can come into play, is like building and pest inspections. Always worthwhile getting them done. They're not going to be overly expensive, but once again, a decent building inspection, I think I've seen around that $700 mark. I don't know if you've seen anything different. So, and the other thing as well, which catches, I think, a lot of people out, is the adjustments at settlement. So for those who don't know, the person you're buying off may have paid the council rates for 12 months in advance. So that's got to be adjusted on a pro rata basis, water rates, council rates, whatever it might be. So all those adjustments come into play. And then typically the best people to speak to with regards to that is the solicitors or the conveyancer. They'll work all that out for you.
Yeah.
But it does, can mean a couple of thousands of dollars that people don't take it.
Especially if you're like doing an apartment, buying an apartment, and then you've got body corporate,
yes,
to be
yep.
$5,000+. So
yeah. So it's just important to have those numbers up front and in your mind, so that you don't get towards settlement and have that oh crap moment where you go, how are we coming up with the rest of the money to get this settlement over the line? So work with your conveyancer, work with your broker, and understand what those costs are going to look like, so you know that come settlement time, you've got enough funds to cover everything in addition to the loan. So
yeah,
it's important to keep that in mind.
Absolutely. And typically you don't want to buy a house and have zero savings. Like, you always want to leave a buffer.
Yep.
Because there's moving costs, there's moving into the property, and then you need to fix this bit, you need to buy furniture here, you need to do something there. So leaving a buffer helps you, rather than just using all your funds and jumping into the...
Yeah, and even with utilities as well. Some people get hit with, setup costs for, getting utilities connected and whatever it might be. So they're not going to be massive by any means, but still worthwhile keeping in mind. So, Eddie, I think a lot of people do obsess over interest rates a lot. We understand that does play a big factor, but structure is also very important as well. So maybe just talk through, why structure can sometimes be more important than interest rates, and maybe vice versa as well in some circumstances.
Absolutely. It's it comes down to what you're trying to achieve, right? Like I've seen people who have taken just the best offer they can get to get them into the market, right? Rather than just waiting for the cheapest rate and the best offer out there. They went with second or third tier lenders just to get themselves into the property market. They paid higher interest rates, higher fees, but when they got in 3 years ago, the property has gone up by $100,000, and that extra interest rate they've been paying is way less than what they've achieved. And then once they're in a better position, they can refinance to better rates. So sometimes just getting into the market really outperforms other than waiting for your, everything to align so you can get the best rate out there. Having said that, if you're in a position to get the best rate and get in the market, then by all means you should do that. And also you can get the best structure as well. So it's not like it's either the rate or the structure. No, like if you're your credit report is clean, your savings are there, your income is clean, then you can get the best structure, the best rate, and get in the market anytime you want. So it's not like this or that, but sometimes, depending on your circumstances, on your, like if you're self-employed and you've been running your own business for just a year, we probably have less lenders to deal with rather than the full, spectrum of lenders to access. So that's why sometimes it's more important to get the structure and get into the market, get the approval done rather than focus on what the rate is. And then 6 months, 12 months down the line, you can always restructure and refinance. So structure is more important because that allows you to really be in the market, get on track with what you want to achieve in the long run. And rates go up, they go down, they're not fixed for 30 years. So you shouldn't always be just, tunnel visioned on what the rate is. So that changes. So that would be my take on it. My 2 cents. I think it's important, Carlo, maybe to touch on, because we discussed the grants, maybe it's good to go through what grants are available for first-time buyers out there. And
I think the 2 big ones are obviously which I spoke about earlier on, was the stamp duty concessions. Now, from state to state, they do vary as well in terms of what's available, what the concessions look like. Bear in mind too, you need to understand that to get these first home buyer concessions, that it's typically going to be for you to live in.
Yeah.
They're not going to be giving you these concessions for you to then rent out the property to somebody else. So same with the first home owner grant, which is probably the big one. I think one of the biggest misconceptions I've found over the years that people think that first home owners grant is available to any type of property, when in actual fact, like the Victorian first home owners grant is for newly built properties or building an actual new property.
Yeah, the first home owner grant.
Yeah, a lot of people go, I've bought
get the $10,000.
Correct. Yeah. So, it can really work well, that first home owners grant, when you're building a brand new home, and if it's under the stamp duty concession as well, you can save a lot on the stamp duty, plus also have the first home owners grant. So that amount you typically would have to come up with in your terms of your own funds becomes a hell of a lot less, which is fantastic. And that's obviously what it was designed for in the first place, to get the young people into the market with a little bit less of a deposit as well. One of the other ones that we're seeing probably a little bit more of nowadays is the first home guarantee scheme, which I know we've talked about it a few times in past podcasts, but that's where typically first home buyers have got the ability to get in the market with as little as 5% deposit, and the federal government guarantees the remaining back. Now, they don't give you the remaining 15% deposit, but they're guaranteeing it. So what it basically means is for as little as 5%, borrow the remaining 95%, I'll take that back one. So it's 5% plus any stamp duty costs you may have as well. But you borrow the other 95%, and there won't be any lender's mortgage insurance. So that's what the government's typically guaranteeing, that there won't be any lender's mortgage insurance. They're basically the bit that guarantees that they're acting as almost like the insurance company in the background. So that's a classic example of what's available for people in terms of the first home. The other one is the family home guarantee. I reckon we're going to see a lot more of that going forward as well, because we've got that generational wealth where parents are sitting on multi-million-dollar properties, no debt on it or minimal debt on it, and they're trying to help their kids get into the property, and rather than giving them actual cash and saying, okay, if we can put our house up as security as well, that helps cover that gap between, not having that 20% or whatever it might be. So, there are lenders out there who will actually allow people to borrow 100% of the purchase price plus costs. So essentially 106% of the actual purchase price, and using their parents' property as security. So that can, once again, help people get into the market a lot sooner. And then the ideal situation would be pay off that debt as quickly as you possibly can to a point where you're at that 80% or less loan to value ratio, and then release your parents' property as security. So hopefully that can happen quickly if the property value goes up as well. So you're paying down your balance, property value is going up, and before you know it, you can sit there and go, well, let's refinance or get another valuation done on the property, stay with the same lender and get it released. So
That's it.
They're typically the big ones that we're seeing at the moment. Just obviously keep in mind, price property caps when it comes to these type of schemes, especially the first homeowners scheme, because there are property caps, and obviously occupancy requirements. So you need to be living it typically for at least 12 months onwards. So, but good thing to keep in mind, that's for sure. So one thing I've always loved talking to you about, Eddie, is the emotional side of buying homes and lending and all that sort of things, because I think it's one thing that doesn't get talked about enough, because there are a lot of emotions that go into, and, do people stretch themselves too far because emotion comes into it? What have you found over the years?
Yeah. Also, obviously dependent on the person, but sometimes it's desperation kicks in.
Mm-hmm.
What the pattern I see usually is first-time buyer excited, they want to get into the market, approval's ready, they see a house they like, they go there, not a great experience with the agents playing games on them, and then they get disappointed. They're like, oh, what's that? It's not great. Oh, I need to find another house. They go check another house and they miss out and buy the third house. They're pretty much desperate. They're pretty much just F the shit.
Yeah.
And we're just going to go out and put.
That's how I sold my first property, actually. My first property that I sold, the buyer who ended up buying our house had been to 2 other auctions, was the last bidder, the last person to be outbid on those 2 previous, and they just went, stuff this, we're just going to pay whatever. And we ended up getting more than what we wanted, which was great. But because that emotional came into it.
They can afford it. It's great, because sometimes, I'd rather pay a bit more rather than go through the hassle of dealing with this stuff. But if you stretch it too far beyond what you can afford, that's where it can be an issue.
Yeah.
And if you go beyond your approval, especially if you're a first-time buyer, you're trying to work around the stamp duty concessions, you're trying to work around all these figures, and let's say you're budgeted around $650, and then you go up to $750. All of a sudden, you're paying full stamp duties. Your deposit is a lot higher, and the loan amount is a lot higher. So that's where you got to be careful. Usually, if you're working with us, we would tell you what your maximum is.
Yeah.
So you know exactly you cannot go beyond this figure. And obviously, if you try to and get it for less, then that's a bonus for you. But you should absolutely know what your maximum is and what you shouldn't go over.
Yeah.
No matter how desperate or how emotional you are, and especially if it's an auction as well, sometimes you get carried away, you're competing with someone else, and this competition goes on. So you just got to stay calm, and if it's meant to happen, it will happen.
Yeah, 100%.
Yeah, really, that's about it. It's highly emotional, especially you're committing into 600,000, 700,000, depends. Yeah. It's a huge figure.
It's the biggest purchase you make in your life, really.
So just remember, it happens all the time. It's not going to be your first. It's not going to be your last. So just breathe through it and take your time. And
right on the money.
Really working with someone that genuinely cares. I've got people that call me on auction day or on the weekends and oh, Eddie, we're going through this. What do you think? And it's just reminding them, right? Because that's all you need, just to be reminded that just, what your figures are, what you need to do, see how it goes. If you're meant to get it, you'll get it. If not, there's always going to be a next property. So good time. And that probably takes us to an important question where do you need to time your finance or time the market? So yes, that's a big one, right? Like,
yeah, I think, if you're waiting for the absolute perfect housing market, it very rarely appears because there is no real perfect market, because it's always goes back to that old saying, whether you're investing in shares or managed funds or the property market, it's just time in the market, not trying to time the market. What you can control is how you time your financing and getting that ready for the purchase when it comes up. So, if you don't get all your ducks lined up from a finance point of view, that's when you can miss out on the property you may want, because you may not have everything ready to go, and all of a sudden a property comes up for auction and it's like, well, I haven't got my finance organised. How do I know I'm going to get the loan approved? So potentially that's when you can miss out on good quality properties as well, or you're rushing a decision, which typically if you're rushing a decision, 9 times out of 10 it comes back to bite you on the backside. So if you get your financing sorted out early on the piece, it also increases your negotiation power, because you can go to auctions and bid confidently, or even if it's a private sale, you can go to the agent and saying, I'm going to bid up to this amount here. I've got a pre-approval ready in place. I know I can get this, I can settle nice and early because, the pre-approval's there. So it helps out from that point of view. The whole negotiation power helps you out well and truly. So yeah, get that pre-approval done. Understand what your borrowing limits are and try and stick to that. Well, don't try, please do stick to it, because that's when you can get yourself into deeper trouble as well. So like Eddie said, when our clients come to us, we typically say, here's your absolute maximum. We've run the numbers. This is what we believe you can go up to. If you can get it for less, fantastic. That's great. But don't overstretch yourself, because that's when issues will arise. I mean, you'll be coming back to us and we'll be going, okay, well, we may need to change tack and we may need to find a different lender. We don't know, depending on what that looks like. So
yeah, I've got a little confession to make as well.
oh, here we go. Yeah.
Sometimes I don't even tell the clients what the maximum is.
Yep.
So let's say your maximum is 700.
Mm-hmm.
I would say your maximum is 680.
Yep.
Okay. Because I think if you know what your maximum is, you always try to push to the absolute maximum and try and push beyond.
Yeah.
And if anything changes, like interest rates have gone up last week, so that extra interest rate might reduce your borrowing capacity, and then you haven't got any buffer left. So I always leave that 20 grand just hidden extra in case something happens. It doesn't mess the whole process. So
because I think a lot of people see, like, you
feel lighter now.
That's right. Your confession week. Quite often when we say to people, here's your limit, it's almost like it's a target. Okay, we've got to aim for that number there, rather than a limit's actually there for a reason. Try and get underneath that limit. But a lot of people go, oh, if I can go with that, let's see if we can hit that number real quick. Exactly right. So, but I think if you just try and get your finances structured and sorted out before the emotional game starts to come into play, I think that's the important thing, because once emotion starts to creep into it, you lose track of everything else. 100%. So get that sorted out first. So I think that's it.
Yeah, I think some good tips, and obviously we're always available for a chat or questions or to help. So please don't feel shy to reach out. We'll wrap it up. So yeah, mainly as a first-time buyer, you've got really good support out there. There's some good, policies in place to help you get into the market. You just need to understand where you stand and what you can achieve, what you can do, what you can borrow, and what grants are you eligible for. So to be able to do that, I think you need someone to help you, or if you want to do it by yourself, please go for it. Otherwise, most mistakes really are avoidable if you get the proper recommendation from the professionals, from the right people. And as daunting and as emotional the process can be, trust me, it's something we see every day. So you rather have someone who pretty much go through the process every day to help you, right? Rather than you going through it for the first time. So yeah, by all means, feel free to reach out anytime. I hope we added some value to your information, and like always, please leave us a 5-star review and follow us, and we'll see you soon. Thank you.
Take care. Bye-bye.
Bye.
Disclaimer: the information contained in this podcast is general in nature and does not take into account your personal circumstances. Head to the show notes if you want to book a free call to discuss your personal situation.